All right, guys, we're back with another Docs Outside the Box tax series money tip. We got Eric McGlothen, CPA. What's up? How you doing?
What's up, Dr. Darko? Good to be here.
You tired yet?
No, not at all. This is where I live. This is my world.
Saving money. This is what we like. We like to save money. We like to
Exactly.
shift more of our personal expenses into our business expenses. We love all of
Yes.
this. Listen, let's jump into this is really important for folks who are working, employed, and they have this side hustle that they're bringing some income in. And maybe they need to create something that's called a cash balance plan, or maybe like a solo 401k or a SEP IRA where the business has its own retirement account and so forth. Let's talk about the benefits of making sure that you can contribute to your business's retirement plan or deferred plan versus, putting into your employed if you're working for someone else's plan. Let's get into that.
Well, so the idea is, I will say this first of all. When you have both a side hustle or side business and you have a 401k at the job, I always tell people, make sure you fund the 401k at the job first. Because remember, that income is harder to tax plan for. So I need to get that income down on the
Mm.
W-2 side, and then we can put money into the business. But that said, we should definitely consider putting money away into retirement accounts through our business. And as I was telling you as a sidebar, Dr. Darko, one is because, first of all, it reduces our taxable income, right? So that's what everybody's going for, right? We want to pull as much money off the table that the IRS can't tax and the state can't tax. That's one. But two is because we're not trying to do this thing all our lives. We're trying to do something else, a vacation, retire, do something different. And we need to be able to set up for retirement. So we need to have that mindset in our head. Three is because on the business side, I will say it's so much juicier than what you can do on the retirement side versus when you're working your 9 to 5. So on the
Pray
nine to
tell,
five
Eric. Pray
side,
tell. Let us
yeah.
know.
So you can put up I think it's 20,000, 6,050. I think that's the limit right now for 2022 on the 401k side. If you have your own business and you have a 401k and put on top of that an employer match and on top of that a profit sharing, you can put up to 61,000
So
in
wait,
one
okay,
year.
that's like a $40,000 difference. So how's that possible and legal?
Because you're the employer. When you work for yourself now, you're the employee, you're the employer, and you're the owner of the business. So you get to have more control over how the plan is designed. And that's really what this plays into. Maybe your 9 to 5 employer doesn't have a profit sharing component. So they're not dumping money in there for the employees because that's discretionary. They're controlling the employer match. They're going to determine how much they want to match up to. So maybe they're not a generous company, or maybe they just don't want to match a whole lot. This is the advantage of. This is why I tell people that being an employee, having your own business is so powerful and so beneficial because you have so much control. There's even a plan above what we just talked about, which is a 401k plan, a defined contribution plan. There's something called a defined benefit plan, which is like a pension plan where you can put up to like 250,000, I think is the limit
Mm.
a year. So there's just so much more flexibility, so many more things you can do on the business side than on the personal side. And let me throw one other thing out to you. That is, you can design your 401k plan where you can actually borrow from your plan.
So
You can
just
borrow
like a
money from.
401k if you worked for someone. Okay.
That's exactly correct. These are the things that are in your control now because you work for yourself. You control payroll, you control the design of the 401k, you control who gets to be in the plan, how long before they work for you, before they can be a part of the plan. There's just all these things in your control. The beauty of being an entrepreneur.
I love it. I love it. So let me just ask this question. So the benefit that you're getting from being able to put in a total of $61,000, is that similar to like the benefit that we don't know that the business is getting that you work for? I'm sure they're getting a benefit for, first of all, having a 401k, matching and so forth. Do they get similar type things behind the
Well,
scenes that we don't know about?
they're getting it, the tax write-off, of course, is a tax deduction there because the money they're pulling off the table to go into the plan, but they also get to control how the pie is divided. Let's use that word. So when you're talking about the profit sharing piece, they can control and discriminate so that maybe they get, if it's a pie is 100%, that they get 70 or 80% of the profit sharing contribution, and then the employees get 20% of that. You see what I'm saying? So that's how they get to control what happens there. Same with the defined benefit plan, with the DB plan, where you can put up 250,000. They get to control, who gets to become a part of that plan, how long they need to be a part of that company. All those things are within their control.
And just for clarification for the audience, that $61,000 that you're saying maximum is, that's also commensurate with the type of income you're bringing in, right? Like you can't just bring in
That
like $50,000 for the entire year for your business and say, hey,
that
like explain to that to us also how that works.
that is correct. I mean, there's these calculations that are based upon like how much money specifically, like on the 401k side, it's based upon W-2 income. So this is
Right.
payroll. Remember we talked about in the previous episode about payroll. This is why payroll becomes so important. So for example, in the S corporation, you can contribute up to 25%. If you're using a SEP IRA, you could put like 25% of your income into that SEP IRA. If you're at a 401k, the way you contribute to the 401k is through your W-2 income. So if you're not on payroll, you don't have a contribution necessarily to make to the 401k. You have to be on payroll. It has to come out of a paycheck.
So this
For the
is so
employee
for the folks who
contribution.
are listening to understand, like there's steps to this. You want to, you may not want to do an LLC just for tax benefits. You want to do an LLC for protection. But then the next step is, well, if you are in a business, if you're incorporated and so forth, there are benefits to getting a payroll, right? From a tax standpoint, from a retirement standpoint. And we've talked about that in previous episodes. So I just want people to understand that there's a reason why we're describing it in this way, just to let you all know there's a stepwise fashion to understanding this. And then also the same way, stepwise fashion to taking advantage of this. So this was great. I really, really appreciate this. So listen, Eric, if someone wants to get in touch with you, they have a question about this. They're like, look, like I'm bringing in, X amount of income or revenue from my business, and I want to put myself on payroll, or I want to start a 401k or a SEP IRA, all these different things. How do I work with you? How do I get some more information from you? Tell them how they can get in touch with you.
Sure. They can go to our website, ericmcglothenllc.com, ericmcglothenllc.com, and just click on the button to make an appointment, or they can just call my office at 404-946-1855, and we'd love to see how we can help.
Love it. Hey guys, remember the disclaimer. This is for entertainment purposes only. Please get in touch with us, or excuse me, please get in touch and confer with your tax professional first before moving forward with any information that you hear on this show. Eric, let's do it again. Let's get in for another tip. I'll catch you guys all on the next one.
Peace.